AG, GBP USD, what's your view, pullback or not? We'll talk about that. Basically, what I want to do is I want to talk about pullbacks and I want to show some strategies. The first thing I want to say is I don't trade pullbacks. Okay. Oh, that's going to be bad. Anyway, I don't trade pullbacks, but I want to show you guys some of the tools you can use to trade pullbacks. Those are things that I kind of went into a little bit when I was day trading. Not too much now swing trading because it's not too much my style. But we're going to dive into some things you can do. And one of the biggest questions people had with pullbacks, and I've talked with the guys just before this going live, is kind of how to look at pullbacks, like what areas you can trade. So I want to maybe get into the technical stuff, like how it works, kind of the theory. And this is like what you're going to see in every course. So every course online that you pay for is probably going to show the same thing, like a theory of what is a pullback, what to enter, like all these things. So I want to cover that in like maybe 5 minutes to make everything clear. And then we'll look at some examples. We'll look at GBP USD for sure. Okay. If you guys are joining me live and you have any question about pullbacks or whatever, just comment and I'll do my best to help out and answer those questions. But let's start first with the theory. Okay. This is the boring thing. And I just want to make this simple. So I will open I'll just open the whiteboard because for me that's easier to draw sometimes and explain to you guys. And as you guys can tell, I didn't prepare for this video at all. I'm doing this kind of to respect the commitment I've made to do one video every single day because I know you guys get some value from this and I want to make this, I just want to respect the commitment I've made. Okay, let's talk about pullbacks. Whenever I talk about kind of trading and the type of trade, that's the first thing I ask people. Like, define what type of trade you want to take. Okay? The market can either be in what we call 4 different phases. Okay? The first one is a sideways phase. This is the market phase. I talked about this many times. The market can either be going sideways like this, and it's not going to be always that clear. Okay? We're getting the perfect example now, but it's not going to be the case all the time. Then it can be trending. Okay, this is where you want to trade your pullbacks. Then it's usually going to stabilize a little bit and doing some more sideways stuff. And then it's going to go back down to either like a downtrend or it could go in an uptrend once again. Okay, then it's going to stabilize once again. Okay, so we just want to highlight the basic things here. This is something that not everyone teaches, so I want to make sure that you guys understand kind of the basics around it and how that works. Now that we understand this, we know that there's 3 types of trade and we can take them in different parts. Okay, if we're going to trade here, we're going to take breakout trades. If we're going to trade within that range, we're probably going to do reversals or pullbacks. Okay, that's possible, like within this big range. Possible to trade pullbacks. But the pullbacks are mostly going to happen in the trend, in the trending part. This is where we're going to trade pullbacks. Okay, now there's a lot of ways to trade pullbacks, a lot of tools you can use. And one of the students I talked to yesterday on a coaching call was kind of confused because she followed a course that was telling how to trade pullbacks, but not exactly like how to enter pullbacks. So they tell you, yes, like you're going to have a trend, now trade pullbacks. And you're kind of there wondering, well, okay, so how should I trade? Like, what should I look for when I enter the market? Are there some things I can add to get more confluence? And that's what we'll talk about right now. Okay, there's many tools you can use. One of them is Fibonacci, okay, which people use. And I don't use Fibonacci that much. This is not Facebook, by the way, it's Fibonacci. But there's moving averages, which we're going to talk about a little bit. Okay, this one I don't really use it. For me, it's not something I like to use. Moving averages, yes. Or you can only trade price action if that's what you want. Okay, price action zones or kind of support resistance, those are going to work as well. Okay, so the only thing with that is that whatever kind of tool you're going to use for pullbacks, if you use like 4 tools, it's going to be very hard because you're going to get confused with all of them and like what things you should use when and like so it's going to be confusing. So you pick on ideally one, you stick to it, And if the pullback you trade doesn't work out that time, you just like forget it, right? You go to the next trade, because there's always going to be new opportunities. And if you are in a mindset where you want to take all the trades, it's never going to work out. Okay, it's never going to be profitable. So that's what you want to keep in mind. Okay, let's go on the chart because that's getting a little bit too boring. Now, what we want to make sure is that we want to make sure the price is not going to be in a range. Okay, that is the first criteria that you want to look for. Okay, if it's going to be in a range, you don't want to trade. That's bad. Oh, no, that's range. Okay, if it's in a range, you don't want to trade. So we'll look to identify pairs that are not in the range. Okay, that's pretty clear. Pairs like this one, UGPY, which is right now on a daily chart, kind of trending. See how, I don't know why there's many lines. I don't draw that many usually. But see how it's been between 1.24 and 1. This is 124, sorry, and 111. Okay, the pair has been bouncing between those two levels. Now within this range, we had some consolidation like this one here. We've had some like these movement. So it's kind of a big range, and we've been back and forth. But the point is, we didn't really go past beyond 1.24 or 126, sorry. So once we broke out of this place, now we can say we are trending because we're no longer in the range. And even though we have this history right here, I won't consider this because at this point we're in a downtrend. Okay. And now we're back kind of in an uptrend. Okay. So this is the perfect place to trade pullbacks. Now, here's where you're going to use the different tools to trade your pullbacks. Okay. If you decide to use only the zones, totally fine. You might look at this breakout right here and you might say, well, this is right here a nice level to buy because we've been breaking out. We might come back, hit the 126 level, and that's where we might be willing to trade. Okay, that's pure price action. No indicator at this point. Okay, but the thing is you have to wait for price to come back all the way to this level. And that's kind of what the student I talked about yesterday was doing. She learned about trading these only with price action. So she would identify like this level, 126, as a support level. Whenever price would come back to the level, she would buy. Here's the problem. She would only buy right away and put a stop loss below the level. But that's kind of a little bit hard to do. It's kind of tricky because you might, like, where do you put your stop loss? It's like you buy at this level 126, good. Now do you place your stop loss here? Do you place it like here? Do you place it like here? I don't know. It's like it's kind of difficult, right? So hence why if I want to trade only price action, I would use some candlestick pattern with that. So things like this hammer right here, which didn't happen at 126. Okay, I totally agree. But we still have the hammer. So if you use those candlesticks, it gives you kind of a place to put your stop loss. It gives you an exact location where you can say, okay, if we go past this location, the trade's gonna be wrong. Like something's not gonna work. So I'm gonna take the loss and just go away. If you were to trade this, you can put your stop loss below. While if you just trade the level, it's really hard to place your stop loss. Okay, so that's really important to keep in mind. If you guys have some questions, just have them in the comment or in the chat. I'll answer at any point. Now, the second way of trading pullbacks is going to be with, let's say, moving averages. Okay, so there's many strategies based on that. Many people trade those. And what I'm going to do is I'm going to place the 20 EMA on the chart. Okay, show you guys how that behaves. This is a 20 EMA. I hope that's clear. I hope it makes sense. Yeah, it should be pretty good. Okay, so what we can do is if we have a, and this is going to work only in strong trends, as you guys can see. Okay, so this part right here has been above the EMA, but this part we're going to come back below, which is why it's not very like a strong trend. Okay, the smallest the EMA is, like a 10 EMA. If you can stay above that EMA, it means the trend is really strong. If price is breaking the EMA, it means it's not so strong, and you want to be careful with that type of trend. Now let's see what happens if we put the 50 EMA on the chart. 50 EMA is going to tell you more about the bigger picture trends. Okay, so if you are above the 50 EMA, the trend's going to be kind of trending, but not too trending. Right? It's not going to be too too strong, basically. So this is how you can kind of measure the trend, whether it's really strong or not. And there's strategies of crossovers where you basically buy when the smaller EMA goes above the longer EMA. Okay, like we had here, 20 goes above the 50. That's a signal to buy. What you have to keep in mind with this is that it's gonna work maybe like 20 to 30% of the time. Okay, that's a fact. And pretty much all trend trading is gonna work 20 to 30% of the time. That's just a fact. But the thing is, when you can get a good trade, like a trade like this, your reward is going to be very high. Like you can have a 5 to 1 reward to risk. Okay? That's just something to expect. Does that make sense? So you do not look at a high win rate. You look at a high reward in these type of trades. Now the other thing you can do with moving averages is trading bounces. When price comes to a moving average that you decided you were to trade, and price bounce of the moving average, that's a good setup. See how we didn't really go. Oh, it's a car outside. It's funny. But see how we didn't really go and bounce on this moving average, right? We didn't have any price action set up because the trend was not strong enough. But when we got to the 50 EMA, then we bounce with this hammer, right? Perfect setup right here. Perfect setup to trade a pullback because we have this acting as kind of a bouncing area. This is basically what the moving average is, okay? What a MA or EMA is what we call a dynamic support or resistance level. It's going to act as a support or resistance level in a trend. That's all there is to it. If you can combine price action patterns or candlestick patterns with the EMA, that's a very strong combination. But keep in mind, it's going to work maybe 30% of the time. Okay, 30% of the time. And that's just to expect. That's just a fact. Okay? A fact of life. But whatever EMA you use, you can try to stick to it because these ones, while you trade the 20 EMA, are going to be maybe more strong trends. But with the 50 EMA, you're probably going to have more kind of lower trend. Okay, they're going to be less strong. But they can be as rewarding as the other one. Okay? Just keep in mind that this one's going to be, if you trade a pullback on this 50 EMA, while price has already broken, so the trend might kind of die afterward. It's possible. You just have to take profit accordingly, okay? And the best way to take profit is always going to be, for me at least, it's always going to be like taking partial profits. So some at 1-to-1, 2-to-1, 3-to-1. So you can really get the bigger move, okay? And not be all in at the end of the trade and try to exit the trade when like price does a big move in your opposite direction. Okay? That's pretty much how I would trade it. Now, let's say we're going to pick moving averages. I don't want to make this video too long, but let me see how long we are. Okay, 15 minutes. That's pretty long. Let's see what we can do with this type of trading if we were to go on GBP USD. I know AJ asked for that, so we'll take a look at it. GBP USD. That's good. All right. Let's see what happens here. We are on GBP USD. Okay. This is a pair I've been looking at many times this past week. Oh, and the other thing I forgot to mention is that you can trade with trend lines, right? That's a little bit too subjective for me. Hence why I don't want to trade trend lines. But it's something you could try, right? The only thing is that once you draw a trend line, like the result could vary. Some people are going to draw it this way. How many people will say, well, this is a broken trend line. And some people are going to draw it another way. It's going to be a little bit tougher to trade. But if you can stick to a clear rule with that, totally fine. But let's forget the trend line. And let's just go with the basics. Okay. What we see now is that GBP USD has been between this range. 1.27 and 1.21. Okay, that has been the range which we broke out of at this point right here. Okay, that's a couple of months ago. Now, once we broke out of the range, here, we came back to retest, came back a little bit within the range. It doesn't matter, totally fine at this level. And then we went back up. The problem I have with this is that the pair seems to not be super strong, okay? So we've been doing some bounces like here, keep in mind the highs and the lows, right? We have this high, we have this high. We're still in an uptrend, okay? But it seems that it's not so strong because the 50 EMA, we're crossing it often, and the 20 EMA, we're crossing even more often. The price is going above and below the EMAs, okay? So this is kind of a place where you might want to trade, but it's going to be maybe with a different moving average. So what happens if we take, let's say, 100 moving average? See. Okay, see, this is a little bit more kind of with the price, 100 moving average. And I don't know if okay, that's the yeah, that's interesting. So technically with this is, wait, something's wrong here. You're gonna adjust. Funny how the 50 EMA. Oh, I think there might be a problem with this one. That's interesting. EMA. You have a problem with this moving average right here. Yeah, okay. But let's see what happens if we were to put a moving average, like the 100 EMA. And as you guys know, I'm doing this like on the spot, so I didn't prepare much for this video. We're gonna try to see with different moving averages what happens with those. And ideally, like, you don't want to trade all the moving averages. That's a little bit stupid, because number one, you want, like, okay, no problem. I mean, no problem. If you have to leave, that's totally fine. But what I was gonna say is that, and you can watch this video after, like at any point, it's gonna be available on the channel. But what I was gonna say is that you want to stick to the same moving averages, because whenever you trade the same setup with the same tools all the times, there's something really powerful happening, and that is the fact that it becomes a habit. Okay. And I was talking with like a trader recently, and it's the same with myself. Okay. I only have one setup that I trade. It's the same setup. I trade it on different time frame, and that's sorry, that's a B. I trade it on different time frame. Okay. But I only have one setup, and the cool thing about one setup, what's up, NTV Games? Nice. Cool thing about having one setup is that it becomes a habit. So the more you can trade the same thing, the more kind of an expert you become in that setup, and that is very powerful. Okay. So if you're gonna say, well, I trade with moving averages, and I follow like these 25 moving averages, well, it's gonna be very difficult to get used to the same thing, because you're gonna trade some pairs like this, where you have kind of a medium trend, and you're gonna trade some pairs like the one we saw before. Was it Euro GPY? Where you have kind of a strong trend. Okay. So you want to stick to the same thing, and if you have to trade more currency pairs, more time frame, totally fine. But you want to become the expert in your setup. You don't have to think, and you know exactly what you're looking for. Okay, so let's just get back to the GBP USD example. Now I applied the 100 moving average. Let's see what happens. We said the previous moving averages we crossed many times. Okay, and that's not what we want. So this one, we've been going above. We came back to retest the moving average, and then we came above, came back to retest. See, we're kind of bouncing off this one, okay? But this one's gonna be useful if you want to trade kind of medium trends. And yeah, thinking is bad. Absolutely right. If you are in a trade and you think, and you have to think, well, let me think. Is this right? Is this kind of makes sense? But I'm not sure. I'll think about it a little bit and come back. No, like, forget it. You're dead at this point. It's not good. So you want to ideally have everything like a habit. So it's written down. It's simple. You follow. You execute. You like a Navy SEAL. And Malkit, I don't know if you've watched the beginning of this video, but we went through kind of the theory in this setup. And I said earlier, I don't trade pullbacks myself, but I want to give you guys some tools that you can use to trade pullbacks. One of my students yesterday was trying to trade pullbacks with a course that she bought. And the thing with that course, as I said, is that it didn't really give like how to trade. It just said, well, look for zones and then trade pullbacks. But it's like, how do you trade pullbacks? Like, what tools do you need? What setup do you look for? So one of the things I said is that you can combine the moving averages with price action. Okay, with candlestick pattern, I mean, because price action is kind of broad. But let's say we were to, and here's a perfect example. The first thing that you want to see on anything, and we said price has to be above the range. Okay, that's for sure. If price is in range, forget your pullbacks. Like, they're not going to work. Okay, that's the first rule. So I'll just go right here again. No range. And I just got an idea. If you guys want to kind of use these bad drawings that I do and like take a screenshot, it's going to help you kind of create a checklist or something. That could be useful, right? Yeah, I see. This is interesting. NTV game. One of the things that you can do is, yeah, you can use the Bollinger Bands, but whenever you have a strong trend, like we had on Euro GPY, the Bollinger Band is going to be very not useful. It's going to be like really bad, because the Bollinger Band, the extreme bands, are kind of the extreme price. See, now we kind of came back, yeah, but if you were to look at this when the price is trending strongly, like in this small area, we're not going to pull back to the Bollinger Band. That's why it's going to be a little bit difficult to trade with the trend. So most of my trades with the Bollinger Band, I take them when it's more sideways, because that's where price goes to the two limits. Like here, we're getting a little bit more sideways. We went to the upper limit, lower limit. That's where you're going to take most of your trades. But in a strong trend, you want to maybe shift to the moving averages. Okay. If you trade pullbacks, like that's or if you trade like strong pullbacks, that's a different thing. So okay, we said no range. Second thing, and I have to get back to this. Now this video is going to be really long because I repeat myself. Sorry about that, guys. I see comment. Andrew, just let me know what you mean with price bouncing off MA or Bollinger Band hit and miss. I'm curious about that. Do you mean like it's not reliable, or do you mean, I don't know? Just let me know, and maybe we can talk about it a little bit afterward. Okay. So what we're gonna do is we're gonna combine. So the second criteria you want to have is that you want price to be above the EMA if you're gonna trade pullbacks. Okay. So if you're gonna trade like a pullback in an uptrend, you want price to be above the EMA for a certain period of time. Okay, so if you're crossing all the time, if price crossing the EMA all the time, it's not worth it. It's not a trend. But if we take the 100 EMA like here, 100 period EMA, we see we've been pretty much above. Starting here, we pulled back. We went a little bit below, but not too much. We came back above. A little bit below, not too much. We came back. Okay, so this is what you want to have. You want to have price above, well, for uptrends, above the EMA that you pick. Could be the 20 EMA, could be the 100 EMA, could be the 50 for a long time. Okay? And that's an important rule. Now, once you have these two criteria, this basically means that you can look for bounces. Okay? You can look for bounces. And sorry, I'm bad at drawing on this computer. Okay? The bounces of the EMA. Now, this we said yes, okay? And even then you want to add some more things. So what I would do is I would not just buy whenever we hit the moving average, because you have no place to place your stop, and that's important, okay? If you're going to say I buy when price pulls back to the 50 EMA, well, or the 100 EMA like here. So let's see where to buy, I don't know, well, here. It's like, where do you place your stop loss? You place it like here, do you place it here, do you place it here, or here? You have like no rule. That's where you want to combine, and that's where candlestick really helps, is they give you a place to put your stop loss. So what you want to do with this, and I'll just remove the Bollinger Band, it's going to be very confusing. So what you want to do is you want to combine this bounce with the candlestick, okay? And we're going to draw a nice pretty candlestick here. If you combine the bounce with the candlestick, that is giving you some more confluence, and that's what we want to have all the time. So then you can pick some patterns that you like to consider. Okay, I see this engulfing candle right now that we had, and this is probably the choice I would pick to trade these things. But whenever you have this, we just break us. We just kind of bounce the moving average. Not long ago, you have this bullish engulfing candle. Okay, you can enter above the high, stop loss below the low, the most recent low, and then I said whenever you want to take your profit, you try to be careful. You try to take profit over time, not all like here where it's impossible to get profit, not all like here where you have almost no profit. You take profit over time to capture the bigger move. And I'll answer to the comments by Andrew, who said, like, this is unreliable. Yes, it is, of course. These setups are going to work 30% of the time. That's about 3, but I hope you guys understand. 30% of the time. That's just a fact for trend trading. That is a very fact. Because most of the time what's going to happen is you're going to do this, and price is going to go, it's going to crash. Okay? That happens a lot. And it's just a fact of trend trading. Whenever you trade with the trend, you do not aim to have a high win rate. You aim for the high reward. The reward could be like 5 to 1. Okay? Like if you think about if you were to buy here when we add this well, we didn't have any setup here, but let's say we were to buy here and you put your stop loss below. That's giving you like a more than 5 to 1, right? Which is very good. Of course, you take profit over time, but you aim to have a high reward when you trend trade, when you trade pullbacks. With my strategy, I'm not looking for 5 to 1. That would be not realistic. I'm looking more for like 2 or 3 to 1. Okay, that's just a fact. But it's really important to mention. And if you think that the bounce of the Bollinger Band is not, not reliable, that's because you didn't have more confluence, right? If you only, as I said, if you only buy whenever price touch a moving average, yes, of course, it's going to be very bad. You might win 5% of the time. I don't know. But if you add some more things like candlestick patterns, looking visually yourself at the trend, those are things that are going to add more confluence. And that's where you're going to get your edge. The thing is, if you were to trade any indicator with at any time, it's going to be very unreliable. And that's the fact of life, of trading. Okay? But if you are to consider what's happening in the market, what range we have, what candlestick pattern we have, all these things, this is what is really giving you the edge in the market. So you want to combine as many things as possible, but not too many at the same time. You don't want to be overwhelmed or have 1,000 things to consider when you look at the chart. So very important. That being said, let me know if you have any questions, guys. I always have the same problem with those videos. Is I start on a topic and then I do 20 minutes of video without noticing it. But if you guys have any questions, just let me know. I think we covered pretty much the setups. Important thing is to stay consistent with the thing you trade. We even did a nice chart here, which you guys can watch after. That's bad. Which you guys can watch after that and get ideas and whatever. I think the purpose of these videos is not to kind of give you guys clear strategy. Well, I want to give you clear strategies, of course, but don't try to copy everything. The goal here is not to copy another trader or what other people are doing. It's really to get ideas. And then you go back to your backtesting cave and you backtest something. You test something out. You look at the market. And I think my previous podcast guest said it best. Whenever you're not trading, you should be working on your trading. You should be doing something to get better, right? Don't just sit and think that, oh, the market's closed, so I'm not going to trade. Or, oh, it's not time to trade, so I'm not going to do anything about trading. You should work as much on your trading as you do. And you should work more on your trading as you do when you trade. Right? That's a rule, I think. Okay? Malkit, yeah, I'm from Montreal. Yeah, Montreal is cool, but it's getting cold these days, so I'll probably head out pretty soon. I'll keep you guys updated with that. It's gonna be interesting. There's a couple of plans, but I'm not sure yet, and I need to plan a little bit more. That's a fact. The one thing I didn't do correctly the first trip is I didn't plan enough, or the first few trips, and now whenever I want to travel more, I think I'm gonna have to plan more. So do more research, kind of have a plan of where I'm going and everything, different countries, and that's gonna be more interesting, I think. But we'll see. It's gonna be interesting. All right. Any question? You guys just post them after the video. No problem. I'll answer them as always. And yeah, if you guys want to check out, if you guys want to learn more about this stuff and want to see like how it's applied and get more coaching as well from me, there's the academy that I have. Do you need much travel? Let me just finish on that academy so I don't forget. But yes, there's this academy. You guys can see all the details over at desiretotrade.com. I'll show you guys quickly. Desiretotrade.com. If you go on join academy, it's this page right here. There's a $1 trial right now on the academy, and this is kind of my small coaching program which I coach people through. And NTV Game, who's right here, has been in the academy. We've made some, I think, good progress with his strategy and everything around that. If you guys want to join, it's a $1 trial. You go on the website, you click on the academy tab, okay, and there's the trial. You can go and join that. I would be really happy to help you guys if you need any help. And I'm just doing a quick kind of promo now because I don't talk about it much most of the time, but it's right there. You can try it for $1. Now to get back to the question from, let's see, Andrew. Yeah, do you need much to travel? I don't know if you talk about equipment or money. In both cases, you don't need much. That's a fact. As long as you keep it low. And like the thing is, I don't like to travel with too many things anyway. And it's oftentimes it's oftentimes cheaper to travel than to stay at home. To stay in a country like Canada, right? That's kind of like an expensive country. And most other countries you can travel for less. Like Thailand is like incredible. All these places in Asia are incredible. China is a little bit more expensive, but most places are very cheap to travel to. And of course, like you have to be careful. You have to know the hacks. You could watch one of my video about the resource I use when I travel. I'll maybe put the link below, or you can search on the channel. But if you like find the plane tickets and you look for price, like don't pay crazy price for plane tickets. If you are careful a little bit, like it can be very cheap to travel. And you can like get to many places for like nothing almost. So that's really, really worth it. Going to move to Montreal in January. Looking forward to meet you. Yeah. Malkit, I'm probably leaving in January for a place. I don't want to say where, but yeah, I just bought tickets for January 8th. So if you let me know, yeah, we can probably meet in Montreal or something, but just let me know in advance. I'm leaving on January 8th, and I'll tell you guys more about that topic a little bit later. India. I've never been to India, so I have no idea. But it's a place I might want to visit at some point. I've seen some picture people. Should be interesting. We'll take a look at that. Cool, guys. So I will finish it here. As I said, if you want to check out the academy, it's a $1 trial. I would love to sit down with you on a coaching call and talk about anything we need to talk about to get you to reach your goals. And if you have any questions, just comment below. Let me know. If you're not subscribed yet, make sure you subscribe. There's one more video like that every single day. Tomorrow it's going to be live also because I didn't record videos these past days. But I want to make sure I respect the commitment I've made. And I'll see you guys tomorrow. Thanks a lot for watching and being here live. So awesome. And I'll see you guys, as always, tomorrow. Ciao.